In this video, I'm going to explain how I use supply and demand in my actual trading strategy. First and foremost, I'm going to explain you what is supply and demand, and then I'm going to show you how you can use this information to make a trading strategy based on supply and demand zones or areas. Supply and demand zones of areas is just where a lot of people is agreeing to buy or to sell an asset. And these supply and demand zones can be represented in the chart, in the candle charts, with weak rejections in the demand areas and supply areas. Supply and demand trading strategies are the same, in my opinion, like the support and resistance trading strategy, because the concept that is behind this trading strategy is the same. Because we are using price action and we are using candlesticks to read the price action and to identify these supply and demand areas or zones in the chart to make our trading strategy. Basically, when we find, now I'm going to use Litecoin for the sake of this video, but this strategy can be applied to Bitcoin, Ethereum, S&P 500 or any other kind of crypto asset, altcoins or anything. So you can use it on gold, on Euro, USD, because the principle, the base of this trading strategy is the same. Even if this trading strategy is very simple, is very profitable, because the horizontal levels in the market are, let's say, high quality levels, respected oftentimes by price. So we can assume that when we find a supply or a demand level in the chart and is in a higher time frame, because you need to take into account also that the higher the time frame that we are going to analyze in the supply and demand or support and resistance trading strategy, the higher the probability that this level is going to hold the price in the as resistance or as the supply or as support or as demand in the chart. So the higher the time frame, if we are in the weekly time frame, we assume that this level is higher quality than if we find the level in the daily time frame. And if we find the level in the 4-hour chart, the quality of this level will be lower rather than if we find the same level in the daily time frame. And if we find confluence between these two levels in the 4-hour chart, the daily time frame, and the weekly time frame, and the monthly time frame, we will assume that this level is a high quality level, because we are finding the same level in different time frames. So we assume that the quality of this level or the probability of this level being respected or acting as supply area or demand area will be higher probability. Having said that, now for the sake of this video, I'm going to make a quick example on Litecoin in the daily time frame. But as I said before, charts are fractal, so the price is fractal. So you can apply the same strategy in different time frames and it will work. The only thing that you need to know is that the lower the time frame, the lower the probability that these supply and demand areas are going to be respected by the price, and the higher the time frame, the higher the probability that these supply and demand areas will be respected by the price. So now we are going to deep dive into the actual trading strategy, the supply and demand trading strategy. What's a supply area? Okay, a supply area is an area where a lot of people is willing to sell the asset. This will be the same as a resistance area. How we find a resistance area in our chart? So we need to find in the upper part of the chart, obviously, a lot of weak rejections from an area. So now if we draw a line, I like to use lines, but you can also use, for example, rectangles, as many people do. Okay, we can use also a rectangle because it's an area, not an exact line. Okay, but for example, for this video, we are going to use a rectangle and a line to make the two examples. Okay, so here, what we find here, we are finding a previous demand area or support area, as you can see here, where the price rejected and bounced to the upside. Okay, then this area was pierced. Okay, and now it's acting as demand area. Why demand? Because here you see every time that the price reach this area, the price got rejected and then again dumped. Okay, we reached this area, a lot of sellers were then sell the asset, and then we go back again. Sellers sell the asset, go back, rejected again. Sellers, we have a false breakout here, and then the sellers again sell the asset, and now again we reach this area, demand area, supply area, sorry, and again the price rejected, and again false breakout, and then price rejected. So this area here is a high quality, okay, supply area. But to identify these supply areas, we need to go back into the past, into the previous price action in the chart. So here we see weak rejections acting as demand area, because you need to know that these areas flipped. Okay, once a demand area is established as demand area, you see now is acting as demand because a lot of buyers in the past, a lot of buyers were willing to buy here, you see, and then the price pumped. Okay, then again, as soon as the price touched the same area, okay, the price pumped again, we touched the same area and the price pumped again, we touched the same area, pumped, touched, pumped, and then pierced. Okay, so you need to know that these supply and demand areas oftentimes flip. Okay, once a area is acting as demand, when it flips, it will act as resistance or supply area. Okay, so that's one very important thing that you need to know. Now, this is an example for a demand area in the past that now has flipped to supply. Okay, because the same place where a lot of people were willing to buy now is the same place, the same prices where a lot of people is willing to sell the asset. Okay, and now we expect that when the price finally broke this supply area, then in the future this area will hold as demand area, as support area. Okay, now how can we see another, for example, demand area? Okay, now for example here we can see a demand area. Okay, here this line, we also are going to use the rectangle. Okay, why? Because we can see that here the price, every time that we touch this area, the price is rejecting and bouncing. Okay, so you see, you touch the area, bounce, touch the area, bounce, touch the area, bounce. Okay, and this what leaves us is with a range. You see, this is a range, simple range. You have the bottom of the range, the upper part of the range. So the actual supply and demand trading strategy without any indicators, very simple, very straightforward, and you can make a lot of money with this. You don't need anything like open interest. You don't need to look at footprints. You don't need to look at RSI or any other VPVR, volume profiles, liquidations. You don't need to look at anything. Just identifying one supply area and one demand area. You see here from April 2022, now we are at April 2024, so the Litecoin price has been inside of this range for 2 years, has been trading inside of this range for 2 years. So imagine how many times and how much money can you make trading just this range inside this supply and demand area. And also inside of the range, we have the supply area, the resistance area, the support area or the demand zone, and we have also the neutral, the midline. Okay, that is the middle of the range. Okay, that the middle of the range oftentimes act as support or resistance or supply and demand area. Okay, this is the same principle here, but if you bought in the demand area back in 2022, and you sell in the supply area, you are making a lot of profits here, because even if you bought here and you sell here, you're making 74% profits here. Okay? Again now, if you bought in the demand area and you sell here at the supply area, another 70. If you open a short when you are in the upper part of the range, okay, and you wait till the price reach again the demand zone, okay, in the opposite side, you open a long here, okay, and you wait till the price reaches the supply area again here, okay, you can trade these ranges. It's very simple, because in the end, if you identify in the higher time frame the supply and demand areas, okay, and you are left with a simple range, with the middle part of the range, when act also as support and resistance or supply and demand, okay, because you see that the price is holding here, and then acting as resistance, okay. But you need to focus in the upper part of the range, the demand area in the bottom of the chart. That is where a lot of bids or a lot of people is willing to buy, and the price is willing to be rejected, then to bounce to the upside. And if you want to go short, you need to focus on the supply areas in the chart or resistance, okay. So it's very simple, because in the end, if you identify these zones, you are left with a simple range, and you can buy spot here or go long here, and then go short here and make a lot of money. Just with a simple range, just identifying supply and demand areas. So this strategy is very profitable. It's just based on price action. You don't need anything. You don't need any kind of indicator. You just need to switch to a higher time frame, draw, as you see right now, 3 lines, 3 rectangles, and then buy when you are in the demand area or support area, and sell when you go or you reach the supply area or resistance area. Then if you are doing futures or perpetuals, you can open a short positions when you see that the price is reversing from the supply area back into the range, okay? And just trade the range, because you see these crypto assets oftentimes trading ranges. You see, back in the day, this was the same range that we are trading right now, here. It was more volatile because the price was not inside of the range, but these ranges, you can trade it perfectly. Very simple. If you identify the actual range, and this example is in Litecoin, but if you go to Bitcoin, if you go into Ethereum, you can find these ranges very easily, because the crypto assets most of the times trade between these ranges, and the price does the same thing over and over again inside of the ranges till the range is broken, and then it forms another range, even if it goes lower, okay? For example, now Litecoin price broke the demand area, okay? The price will form a range here, okay? Price will form a range again here, okay? Because crypto assets oftentimes trade inside of ranges, okay? And then when this range will pierce again, it will get back into the previous range. So identify ranges with supply and demand areas, and then trade the range. When you are in the bottom of the range, in the demand area, bid, buy, go long. When you are in this upper part of the range, go short or sell the asset. And it's very simple. If you identify correctly these supply and demand areas, support and resistance areas, you find the middle of the range, so the equilibrium zone, like we are here, equilibrium zone, okay, that act as support and resistance or supply and demand because it flips, okay? As I said before, these zones, liquidity zones, flip. And you can trade based just on that. And you will ask me, okay, Soldier, why this works? Why this principle works? You know, this is just liquidity principles, because weak rejections, when you see in the price action a rejection, a heavy rejection a wick and then a reversal, is just because a lot of buying orders, a lot of people are buying at these levels, because maybe psychological level. You see, this area coincides with the price of Litecoin on $55 till $60. A lot of people use, let's say, complete numbers like 55, 60, 65, multiples of 5, okay, dollars, for example, on this, because there are psychological levels where a lot of people is agreeing to buy. A lot of people is agreeing that the price, there is a good price to buy. So a lot of liquidity is sitting there, a lot of bids are sitting there, a lot of limit orders or a lot of market orders were executed at those prices, willing to buy the asset. And the same as the supply area, okay? Because a lot of people, when we arrive to $100 on Litecoin, 105, you see, are oftentimes complete numbers. 100, 105, here the same 80, 85. You see, a lot of people in these levels is psychological. A lot of people is willing to buy, sell, or hold the asset in these levels, okay? And this means that a lot of liquidity is sitting in this level, so a lot of people is willing to sell the asset at these prices, and then the price dumped again into the demand area, and then again is repeating the cycle. It's just a cycle, okay? So very simple trade strategy if you now know how to identify these supply and demand areas. And as I said, it's very simple. Just focus on weak rejections, where the price was rejected with a wick. You can see here in the daily, weak rejection. In the daily, weak rejection. Again, the price gain momentum. Here, weak rejection. Then the price gain momentum. Again here, weak rejection. You see the wicks are the tail of the candles. The tail of the candles. You see these long tails, these long wicks, and then rejection. Okay, from the level. Again, long wicks, long wicks. You can see this is an indicator, a volume indicator that highlights the candles that with a lot of selling and buying volume. This also helps me identify these supply and demand levels. But even if I don't use this indicator, just looking at the chart and the previous price action, I can see, okay, this wick told me that this was the bottom of the range. Then the price pierced, because obviously a lot of people was going long here, so generated liquidity around this area. Then all these longs that longed very early here got wrecked, and then the price get back into the range. This happens a lot of times. We see a range being broken, all the liquidity was run through, okay? A lot of long liquidations here. Then after the long liquidations, the people keep longing. So when you long here, you see the weak rejection, you enter long here, okay? Let me make an example. You enter long here and you put your stop loss, funny, okay, below the last weak rejection. That's what they told you to do. What happens when you put your stop loss here? That you are generating liquidity here. So what the price does, it goes to hunt the liquidity that is near to the level that we are right now. So what it does, the price goes, triggers all these liquidations, all these stop losses, and then the price reverses and enters back into the range. It's funny because the market does everything the same for all the time. Just cycles that repeats, okay? So if you know how the market reacts, the price action, you know how to read it, and you know, obviously the price here can bounce, okay? But when you see weakness, you see this depletion here, okay? Obviously, if you for example, you switch to Heikin Ashi, okay? For example, this is just a tip that I give you. You see this weak rejection. This is telling you that this reversal, the price is not going to pump here. This is depletion. The price liquidated the longs, tried to pump, got rejected, and then go again to liquidate the longs again. And then when all the liquidity, all the stop losses here got hunted, okay, then it reversed to the upside, okay? So this is today for the video. That's it for today for the video. I hope that you understand this very simple principle here. long video, but I wanted to make clear the point here and explain very well this concept, because I think that it's a very simple concept. A lot of people is trying to sell you indicators or sell you heat maps or sell you open interest or sell you very advanced things. And in the end, trading is very simple if you know how to identify just supply and demand areas. So thank you for your time, and we see you in the next video. And as always, remember to follow me on Twitter, on Instagram, on YouTube, on Rumble. So follow me on my social media, keep in touch with me, stay connected, and learn for free how to become a better trader.